what you actually need for the account for to actually trade spreads. So first off, it could be any broker. I have Robinhood up here because I know a lot of people use Robinhood. Just going to make it easy when I actually, show you how to execute a trade on here. But you need a margin account and you need level 3 options for any broker that you use. So margin account and level 3 options. That's to even start trading spreads, being put spreads, call spreads, iron condors. Now, we'll get into this later on a little bit, but you could sell puts or sell covered calls if you have 100 shares of a stock. That you only need level 2, but we're fully diving into actually selling spreads and put spreads, call spreads, iron condors. So again, margin and level 3 options trading to do so. Now, what we're going to do now is basically go over a put spread. A put spread is actually a bullish trade. So you want, in this case, I have Qs. I trade Qs a lot. I trade NDX a lot. In this case, you want Qs to stay above a certain price to make profit. That is what a put spread is meant for. And you're going to be collecting premium. You want the sold strike, the stock price or the index price in this case, to stay above that sold strike to collect full premium. Basically, how a spread in general works is you would sell, let's say, a 622 put on QQQ, and you would buy a 621 put, let's say. It's literally just going to do $1.28 minus $1.05, and that's where you're going to get the
profit. And you're buying that put to hedge yourself, right?
You could do it to hedge yourself. You could do it for actual trading. It could be, there could be so many uses for spreads. Like for hedging in a way, let's say you have a name that just ran up a lot. Let's talk about Rivian, okay? That's where like I would do something like a covered call. And you probably heard me and Casey talk about it on the Wolf Live Trading this week. We sold covered calls on Rivian because it went up over 30% in under a week. And we made profit on that because it didn't get over our $25 price, I think. I don't know which one Casey did. I did 25s and 24s. I think he basically did the same thing. So that's basically, a hedge to collect premium, if it drops, because we both own shares of Rivian. But in this case, when we're doing a put spread, I'm trading this every single day. I've been doing spreads itself for over 6 years now, and it's been probably, I call it a second income because that's literally what it is. It's a strong compounding strategy, especially if you do it right and you size appropriately, have proper risk management. So let's kind of dive into an example of a put spread here. I sold a 622 put and I bought a 621 put. We're obviously using just December 30th expiration for the example. You get 23 cents of credit. So for I'll make $23 for every contract I buy. Now, because I'm selling a 622 and buying a 621, there's a $1 strike difference in between that. Obviously, what that basically means is you'll need $100 in collateral per contract you open, per spread you open here. So if I do one contract, I need $100 to open that trade, and then I'm expected to make $23. So that's a 23% return on that.
So if you want 10 contracts, you need $1,000 to be able to cover that. Okay.
Yep, $1,000 to open 10 of these contracts. And in that case, you can make a max profit of 230 because you just timed this by 10.
Because you're looking for those contracts, just for the audience here, to go from 23 to 0. Right?
Correct.
It's the opposite. See, and that's something that I kind of couldn't wrap my mind around at first, but you're wanting your contracts to go to 0 because you're on the opposite side of the trade of what you usually would be, right? Traditionally, we're trying to buy an option at a low premium and have it go up, right? And sell it at a higher premium, where as this, you're essentially shorting the premium. And that's what I got. It's very similar to kind of shorting stock in a way, because you're looking for that premium to go to 0, right? And that's how you're making your money.
So now that we basically did a put spread, and if anyone has any questions on that, always feel free to ask. We're going to do a call side. So in a call side, you want, again, same type of thing. You're going to be selling a strike and buying a strike, and that's how you get your premium difference there to make money. now we're going to sell, let's just say a 627 call. So we want Qs to stay under 627 by the expiration to make profit. And then I'm going to buy, this time I'm going to buy $2 out. So we're going to buy a 629 call. So on this one, we're $2 strike wide. So it'll be $200 per contract if you want to open it. Okay. But in this case, we're also making a little bit more premium. Now, if you see, if we did a $1 strike wide, you see we're at that 23 cents again. $2 strike wide, $200 to make 41 cents or $41. So if I wanted 10 contracts now, I would need $2,000. And then if I wanted 10 contracts, I would make 441. So again, great return on that. But I also want to dive in very soon on how I pick my strikes, because I personally wouldn't do it this close. But again, in this case, all you need is for the stock price or the index price of Qs to stay under 627 to make profit. So call spread is bearish, put spread is bullish. Kind of opposite of what you normally think in a directional trade, where you're buying puts, you want it to go down. You're buying calls, you want it to go up. Another thing to kind of note, be notified of here is when, what's it called? So you can have the stock price now, whether you're on a put spread or a call spread. Okay. In this case, we're on a call spread. So I'll talk about the call spread side. Sorry. So share price is 623.20. Okay. We sold a 627. Qs can go up to 624. It could go up to 625. And yes, you could be losing money in that case. Your contracts could be going up in value. In this case, you'd be losing money because you want them to go down in value to make, money. But in this case, it's just going to be theta burning. So it's 2:11 right now, 2:11 p.m. Eastern. If the market was open, we would have an hour and 39 minutes left. If the stock price is at 624 to 625 and we had these open, early in the day, the premium, and we got this at a 41 cent premium, the premiums would probably be about 10 cents.
Yeah, they would be almost worth nothing.
Exactly. Because at this point, we're already theta burning, and we're still over, if we're at 624, we're over $3 away from our sold strike. And that's the one that matters. Again, the only reason I have a lot of people ask this question, the only reason you choose a buy strike, specifically the buy strike side, is where the question comes into place. It's just how far you want to go out more so. So for example, okay, I sell the 627. You could see if I buy the 628, I'll need $100 in collateral. Okay. Like we talked about, and you make $23. Now you buy the 629, you need $200 in collateral, but you make $41. Same thing. If you go $3 out, you need $300 in collateral, and now you make $53. So it's more so depending how far out me personally, depending how far out I go in my sold strike, I may need to go further in my buy strike to make more premium. And that's where I'm going to kind of get into, how I choose my strikes. I know I kind of sent a lot of information. I may have went off the wagon there a little bit. So if anyone has any questions, Jordan, is there any?
You're good. Yeah, someone was wondering, our boy C's was wondering, can you be assigned for any reason?
So yes, you could be assigned. You'll be assigned the sold strike. So for example, I've never been assigned before, but you would be assigned the sold strike. So let's say in this case, again, let me pull up the example that we just did. Okay. The 627s, let's say you hold Qs for some odd reason, past 627, it closes past, above 627. You would be technically now net short however many contracts. Let's just do one contract to make it easy. You'd be now short 100 shares of QQQ at 627 plus this premium basically. So yeah, something to keep in mind there. And I'll get to that further on, talking about the risk management. I just wanted to basically go over the basics of what's a put spread, what's a call spread, and basically how it kind of looks here when you're kind of executing it.
Yeah, for sure. And shout out Amp. I know he became a 2-month member on the channel, so shout out to that. Wolfpack, baby. He said spread them. Shout out. Casey was saying, yeah, you can only be assigned on the short side. Jug was wondering, do you look at the deltas when you're choosing your strikes at all?
Yep, yep. I'll get to that 100% in just a few minutes here. Okay, so before we get to that, I just want to do one more explanation. So we have the call side here. I'll keep that same call side. So we're selling the 627 calls and buying the 629 calls. So now we're going to open an iron condor. Okay, so in this case, let's sell a 620 put and buy a 618 put. So now an iron condor is where you basically believe that whatever ticker you're trading is going to basically range trade. So in this case, I'm going to sell $2 strike wide on both, because if you sold a $3 strike wide on one, or you sold a different, in this case, a $2 wide, you would actually have to. Okay, let me make this simpler because I'm thinking too much in my head. If I sell a 627 call and buy a 630 call, that's $3 wide, obviously. And then I sell a 620 put and buy a 618 put, that's $2 wide. The whole entire trade, I'd still actually have to do the $3 wide because I opened one side of that. So I always like it to keep it the same width of strike length on both sides. So in this case, $2 wide. You will only need, by the way, people think, ask this a lot, you will still only need $200 in collateral for the whole entire trade. Just because you opened another side does not mean you need 400 now, doesn't multiply. You only need 200. So now your credit's even higher. Okay. So $200 per contract to make $67. That is an absolutely phenomenal return. That's over 30% return on that investment, investment. But in this case now, you need Qs to stay in between the sold strike of the 620 put, so 620, and the sold strike of 627. Oops, sorry. So for that, again, QQQ, 620 and 627, you want, for an iron condor, you want it to stay in between that price to make profit. Does that make sense? Anyone have any questions on that? And we could always go over that again. So again,
I'm thinking we'll do a full Q&A too. You can do your explanation. We'll do a full Q&A at the end with everybody if they have questions.
Perfect.
But yeah, the iron condors are something I've been getting into a lot because I'll end up getting in a spread, early in the morning. That ends up maybe like lately it's been call spreads early in the morning, and then we'll end up taking that drop, and I'll be able to pick up a put spread as well because we've just been pretty choppy and staying in a range on the market. So it's nice because you don't have to enter them both at the same time if you don't want to, right? You can kind of wait it out and say, oh, I was initially just doing call spreads this morning, but now we're setting up. We dropped a lot, and I don't think we're going to go much lower. So I'm going to sell these. Maybe we're hitting 614 on QQQ. I'm going to sell. I don't think we're going below, 611. I'm going to sell these 611s to anybody that thinks we're going to dump all that way 0 days and try and collect that premium on those as well, right? And then I'm in an iron condor and just collecting on both sides until the market closes, right? It's a beautiful thing. But yeah, continue, Gnotz.
Yeah, and you can see here again, just Robinhood image here. You can see the 620 and the 627. As long as we stay in between that, you make profit, and you're all good. So we did a put spread, we did a call spread, we did an iron condor. Now we're basically going to go into how I do the strikes, how I pick the strikes that I want. So for me personally, I am very conservative. I'm looking to compound my account over and over. Yes, you're going to have losses. No matter what, you're going to run into a loss. But I'm looking for compounding. I'm looking to grow my account. So what I personally do, what has worked for me exceptionally over the past 6 years, and again, it's literally a second income for me. And people that have went into spreads and, have, learned basically the way I do it, have absolutely, again, changed their financial life. And I don't mean to say that like that is literally going to happen. The stories I've heard, the people I've met, I talked to 2 guys specifically that were having major troubles with options trading. And they just totally deaded options trading and just went straight into spreads, which obviously isn't options trading thing, but strategy. But have only focused on spread, has just been an absolute game changer. So it's really great strategy.
I'll tell you right now, if I started with spreads, obviously you can, get yourself screwed up if you don't know what you're
100%.
doing. So but as long as you're, in the know and you're having that stop loss, this would save me so much money from the beginning. I would have been able to just find consistency so much faster and actually be making a little bit of money, consistently and not just showing up and gambling away. So I really recommend this for people to start out with before you go trying to flip, cheap premiums. I would really look into something like this further.
Yeah, 100%. So basically going into how I choose my strikes, what I'm looking for is, depending on what broker you're on, and you could see in this case for Robinhood, it shows you the chance of profit here. That's the same thing as a delta. So I'm always selling strikes that are 88% plus chance of profit. In that case, when you're doing a delta conversion, basically, again, very simple, you're looking for a 12 delta or less. Again, this is what has been exceptionally working well for me. So I am looking to my sold strike to be 88% plus or a 12 or less delta. So in this case, I'd be looking, and of course, it's not just looking at the delta in general and just saying, oh, okay, I'm going to do put spreads today because of, the delta's really high on this side. No, I'm still looking at the charts. I'm still looking at the trend. And again, I'm going to keep getting into that further on, but I'm just going to go into how I choose my strikes. So I'm going to sell a 616 put here. And in this case, I want to collect some decent premium. I want to get more than 10 cents, So I'm going to go $3 wide. So I'll need $300 per contract, selling a 616 put and buying a 613 put. In this case, let's just say I believe that the market's going to, push higher. Let's basically go over what happened on Friday. And I saw we had this major drop. I got put spreads, around here. I like to do mean reversion trades with spreads. That has been my bread and butter over the past 6+ years doing this. And of course, again, I would not be 100% every time. And you can see, I'll show you my results, very soon once we get past some of the introductory stuff here. But that mean reversion part of spreads has been absolutely exceptional for me. So I'm selling a 16 put because I thought the market was going to hold up, and I'm going to buy a 613 put as my, collateral difference here. So I'd make $15 per contract with $300 in collateral. So that's a 5% return on investment, $300 for every contract I buy, and I'd make 15. So again, let's just say, the 300 divided by the 15, you'll get 5% return on your investment, which is a great trade. There is nothing wrong with that. Again, especially if you're compounding, that's the whole goal here with spreads trading, when you take that conservative approach. So that's basically that. I'm always looking for 88% plus delta. And that has been something that has been a key for me, has been working exceptionally, and I stick by that 100%. I do a lot of same day expirations for Qs and NDX. Again, in this case, we're doing it on a Saturday, so I won't be able to kind of show you, but you could see the same results here, and you can see the same thing when you're looking at chance of profit. Let's see, one second. I have, I just want to see if it shows the delta here, so I could show you the same thing. Give me one second. Okay. Oh, hold on. That's the wrong side. Puts. I sell, let's just say 618. Delta is going to be, so again, it shows delta there is basically 9 cents. So that's basically a 91% return on, 91% chance of profitability. So again, same type of thing. You kind of just look for that. If you don't have the chance of profit on your brokerage, as something like Robinhood does, you just do 1 minus the delta that it shows. So 1 minus 0.09, and you'll get 91%.
So that's an easy way to figure it out.
Yeah.
I didn't realize you could figure it out that way. That's super easy.
Yep. So that's basically how I choose my strikes. Now, obviously, again, I tie that into my charting. I'm not just going to say, okay, this is a 91%, chance of, or 89% chance of profit, but the volatility has been absolutely crazy. Well, not recently, but I'm just saying the volatility has been crazy. Maybe I'll go a little bit further to be a little bit safer. In this case, over the past couple days, we haven't really gone that crazy.
Well, this whole week, it was you guys heard us chatting this entire week, right? It's super expected that we're just going to chop. We're not going to get these crazy outside moves. Volatility was projected to stay low, which VIX did, right? So we weren't already like, that's why these weeks where it's actually horrible for us to be trading directionally and everybody hates it, it's so good for these spreads, and it's almost so free because you could just show up and be like, oh, we're expected to chop. I don't think we're going to make these outsized moves, but early in the morning, that premium, that it's there, right? A lot of the time. I know later towards the end of the week, it started to really get drained out. And we didn't have much to play with, but still, I mean, Christmas Eve morning, I was selling premium, even though, it was it's still a little riskier, I think, on a day like that where premium isn't as high, of course, initially, but still, I was able to find a little bit early in the morning, let that just drain out the whole day. So,
and that's
just some really great pieces there.
All that premium dropping is because VIX has just been absolutely killed from 17 to 13. So, that's a big part of it. So another thing I want to go over is we talked about put spreads, call spreads, iron condors, basically how I'm choosing the strikes. Now I want to talk about some rules that I set in place. So me personally, I wait till 10:30 a.m. Eastern, an hour after the market opens, to get all the data out of the way, see if we have a trend in the market, within that hour. And, hopefully in that case, I don't trap myself in entering something too early and, it going against me. So I'm trying to figure out what the trend is for the day, what the market wants to do, digest that data. So 10:30 a.m. Eastern is my first rule. Second rule, 200% stop loss. Now people hear that and they go a little crazy. They're like, why would you risk 200%? I've tested 300%. I've tested 250%. I tested 150%. I found that 200% is that sweet spot. So again, we're doing a strategy that, for me, is a compounding strategy. So in this case, let's just use this as an example. Okay. I buy one contract. I make $15. My stop loss is $30. I'm okay with losing 2 times my premium because I know with the consistency I have on this, where I'm winning 85% of the time. And you can see here, I'm winning 85% of the time. Look at all the green there. So I'm winning 85% of the time that I know I could withstand a loss and continue to compound and make that loss back within 2 trades at most, and then be in profit on the 3rd trade.
Well, yeah, it's simple, right? It may be a negative risk-to-reward ratio, but which
Correct.
I'm usually not in favor for, right? But when your win rate is so unbelievably high,
exactly,
it doesn't matter. You're totally willing to show up and say, I'm going to win 100% and I'll risk 200%, no problem, because that just means, okay, if you take a loss, you lost your past 2 trades. It's essentially what it means. Yeah. Of course, if you're sizing somewhat consistently with this, that's all that means, right? And so, of course, traditionally trading, I'm not looking to do that because on the other side, we can get so much more in our favor. It's so easy to get a positive risk to reward, but it's not with spreads. You need to withstand that little bit of drawback, right? And I've found that personally to be perfect as well. I haven't really tested anymore, but I've just been following what you've been doing, Gnotz, and having that with as high as the win rate is, it's no problem. And even if you do get knocked down on a day, okay, like you lost the past 2 trades that you've taken. So what? Like now you're projected to go on another streak because it's just you've already gotten that loss out the way now, right? So I think it's really just about, I mean, any trading style, this is the way, but it's just about keeping that loss when it does come mitigated. Keep that loss small, right?
Yeah, it keeps you in check. It's in this case for this specific strategy, and again, it's worked for me for years. It's good risk management. Again, this account, now I'm for this account specifically, I I have been sizing heavier. But this was $5,000 to $94,000 in just over a year. Again, that's me sizing aggressively. Where I'm doing one now that is much less aggressive. But again, you can see the results here. You know, obviously, if anyone wants to see a visual, you could see, you know, you're making money. Boom, you get a little haircut, making money, haircut. You know, I had 3 losses within, or I think 2 losses. No, 3 losses within, you know, 2 weeks. But now I'm back to all-time highs again. You're never, no matter what strategy you do, you're never going to be 100%. And if you believe that, if anyone tells you that they have a strategy that you're never going to lose, that is something that you got to run far, far away from. But with the way I'm personally trading these spreads, again, choosing an 88% plus chance of probability or under a 12 delta in that case, you know, you're going to see a win rate of this case. Using that 200% stop loss, you know, you should see consistent gains just as I have. And I'm really happy I've documented this because it's really gotten people to get into spreads, actually seeing how this could compound. And that is my goal because honestly, like I said, and I say it all the time, I know I've already said it 4 or 5 times on this, you know, stream just in general, but it literally could be a second income. And it has been a second income for me. So
you could totally get to a point where you're making an extra few $1,000s a month, you know what I mean? And pretty quickly, I would say. It's all just about your risk management, of course, how much funds you have to start with. But I mean, I've seen you go start accounts that, you know, you were making a couple $100, and I've seen Casey do it where he's making a couple $100 when he first started spreads, and now when he does spreads, he's making like $1,000 every time he does spreads or close to it, right? And it happens quickly, right? That happened very fast. So I don't know. I hear everybody talking about spreads are boring and they're not as flashy, but I don't know. The profits are pretty flashy, I would say, and that's what really matters. So
yeah. So going back to the rules, I wait for an hour after the market open for safety, see what a trend is, you know, what the market is trending. We talked about the 200% stop loss rule. We talked about the 88% probability. That's another part of the rule. Another thing that I do is again, this isn't a crazy one, but I don't trade FOMC for spreads really. It's just too risky, as well as the premiums are usually inflated the whole entire day. That's a simple rule that only happens 10 to 11 times a year, but is something to consider. I don't trade FOMC for spreads. Another thing I talk about is, again, me personally, I've developed a strategy that is same day expiration that's really worked. You could obviously do weeklies on stocks, you could do monthlies on stocks, but rule wise, that's basically kind of it on that. It's really just 3 rules: the 88% plus probability, 200% stop loss, and waiting that hour. Another kind of tactical rule that has been added that I actually seriously don't think I've lost on in 2 years is when the market gaps up or down over 1%. I'm already so this is the only time where I'd actually break that 10:30 a.m. rule. I usually wait.
This is when we do that because usually premiums are a little too inflated at the beginning when they gap up or gap down that much, right? That makes sense.
So I usually wait about 15 minutes, kind of let it digest a little bit. And hopefully it kind of goes in the direction that I actually want to sell it. So for example, let's just use this as an example. Let's say the market gaps up 1.2%. And 15 minutes into the market, it goes up another, 0.2%. I want to sell a call credit spread because the premiums are going to be jacked because of the gap up and also that move at the open. So I want to sell a call credit spread. In this case, let's just use this as an example. So this is where one of those examples where I'd like to be a little more safe. So let's say market gapped up, it's at 623, okay? Let's say it goes to 624. In this case, I would want to go safer. So I'd sell 630 and I'd buy a 633, and I could collect something like that. And this is the only time I'd break that 10:30 a.m. rule. And here's why. So when the market's already up, let's just say now that 1.2% plus the 0.2% that it rose, historically, you could look this up, market closing over 2% or down over 2% is under like 7% of the time, and the market closing over or under 3% is under like 2% of the time. So I may be off a couple of 0.5% there, but historically, I also had that in my favor already. So premiums are higher. I have historical data for over 75 years, in my favor. That is why I do that rule. And I swear to you, I literally have not lost that within the past 2 years. It has been exceptional. I'd have to go back and like truly calculate. And if I really did lose one, it was literally one. That's how exceptional that has been. Because also you think of it in this way, obviously when things gap up a lot, people want to, take profits. In that case, for when it gaps up over 1% or something, when things sell, yes, there could be panic, but also you usually see a lot of dip buys, and we've seen that a lot, especially over the last year. A lot of dip buys, a lot of V recoveries. So it's just things to think about, and adding that historical kind of factor into it was just big.
Yeah, I found for me too, especially like earlier in the morning, it's like you see everybody trying to pick top, trying to pick bottom, and do this and that with normal trading, right? Whether it's futures or options. And I'm really never an advocate for that, of course. You guys know me. But when you're trading with spreads, like if you're going to try and catch top or bottom with anything, it's the best to do it with spreads, right? Because now I'm trying to catch that that extra spike of volatility. So that's what I've been doing too lately, Gnotz, is like when I'm getting ready to sell a spread, I'm kind of a lot of the time I'll wait for that extra like spike of volatility real quick to get that extra vol on my contract. You know what I mean? And so I would never be entering a buy position there where I'm entering that spread, because there would be no confirmation for me trying to like short the top or long the bottom, right? But with spreads, I can absolutely do that. And having that 200% stop loss gives me room if this thing wants to continue pumping against me or dumping against me, right? And so I've just found it personally, like if you're going to try and pick bottom with anything in the market, it's like do it with spreads, if anything, because you're not getting screwed.
Yeah, you don't need a directional move. And you could, basically, in a way, save yourself in a way, by selling, further out, contracts. Selling in a case like this. Okay, we got to move from 622, let's just say, down to 618. You could sell a 612 put, buy a 610 put, and you would need it to not just drop another $6. But this is a good example here, and this is where I kind of wanted to go. Again, talking about that mean reversion where you just talked about that extra vol. And this is where also, it could really help out in that case. So when the market's dropping or rising a lot, I want to sell that direction. I personally want to sell the opposite of what's going on. So yes, the market's dropping, but I'm going to look for a bounce. I'm going to hope for, something to kind of turn around here and sell a put spread, because, I want to get that mean reversion. I want to get where I get the highest, juiciest premiums. And in that case, it would be in put spreads. Now, again, I'd look at prior supports. I'd look at, selling a pretty safe contract, again, 88% plus probability, and going from there. But this is
there a minimum like premium that you would take on a contract? Like let's say, we're dumping to 617.90 there, basically the lows. Yep. You're looking at contracts, maybe you're looking at 612s, but it's like, oh, they're only 8 cents, I got to look at 613, 614s, whatever. Is there like a max number you would go?
Yeah, I think that's a great question. Minimum? I think that's a great question. So for Qs, I'd say my minimum is 7 to 8 cents. And that's where you could kind of, so you sell the put and you may have to go $3 wide to get it or $4 wide to get it. But 7 to 8 cents is something I look for on Qs. And then for NDX, which is another ticker I trade a lot, I realize that sweet spot that I don't want to go under is around 55 cents, 55 cents. So yeah, I feel like that was a really good question, Jordan. But those are spots for me that I realized have been like my minimums: 50 to 55 cents on NDX and about 7 to 8 cents on Qs.
And then Jit was saying, when do you decide to close the trade when it is in profit? Well, ideally, right, you're holding these till market close because option contracts expire worthless, right? We're trading, we're trying to sell 0-day options. So what do we want ideally to happen? Well, we want to hold those until the close, until they're worth nothing, zero, right? So ideally, you're sitting in these all day, but with that, it's not something you're heavily managing throughout the day either, though. I've walked away from my screen plenty of times. Just after you get to a certain point, over 60, 70%, I'm like, oh, we're chilling. And then you could just see the premium drain happening in front of your eyes, right? There's definitely opportunities where you might exit early, and I'm sure we'll get into a few of those opportunities and show that. But for the most part, you're not looking to get out of this. You're looking to hold it till the market closes, and it takes you out of the trade, right?
Yeah. That was, again, perfectly said. So, preferably I do like to hold them to expiration, especially if it's going in my direction. Let's say I buy a put spread and it just keeps, running up, which was the case basically all this week. I have really no reason to kind of close it. Now, let's just say, for example, and I've talked about this too on the lives. Let's just say I entered a put spread, and within 10, 15 minutes, I'm already up 50 to 60%. Personally, I close that, and then I look for a dip to add another one. That's basically kind of, a situation I do. In another case, if you want it to be safe, you could always, especially 100% in volatility, 100% in volatility, I do this. So let's say we're volatile, okay? Let's say VIX is not 14. Let's say it's 18, 19, 20, or higher than 20. We get 50 to 70%. I'm usually looking to close at least 75% of my position, if not all of it. And that's just being safe because we know the market could easily turn around, and go against our direction. But usually, and especially in a case like this where the VIX is really low, I try to hold it to zero. I try to make that full profit. But if I am in 50+% profit within 15, 20 minutes, I'm just going to close it out and just look to reopen a new contract. So that was a really good question there. I'm trying to think what else. Hold on. There's a lot more.
You want to get into just maybe a few chart examples of like maybe some just what you would do in some examples. Obviously, this week was perfect for it. There were a lot of great opportunities to sell some spreads this week. So,
let's kind of just dive into
a lot of time. I personally pair it up with my normal trading, right? So if I'm, if it's going into 10 o'clock, we just popped up, market just ripped to the upside, and we're ripping into London Asia highs and sweeping those highs, and we just left London Asia low and previous session low below us, right? I'm already thinking short. When I'm traditionally trading, right? I'm already thinking short. So with that, if I'm thinking short, well, I should also be thinking, what type of call spreads do I want to sell up here, right? If I'm thinking I'm going to try and take a directional trade, well, I should absolutely be thinking about call spreads at that time, right? And looking where QQQ's at, because that's where I'm mostly doing the spreads personally, and saying, oh, okay, we're trading at 612. I really don't think we're going to trade above 615, and I'm about to take a short. Let me get in some call spreads, right? And so I just pair it with my trading personally.
Yeah, no, that's great. It kind of dived into what you said, Jordy. This week was honestly pretty easy. I went put side every single day, as you can see here. And it's just because the market was just bullish. We were on Christmas week. Historically, you see a lot of bullish moves. We had one day, the Wednesday half day, where we just went straight up. And that, sadly, you actually made not that much. It was good. I'm not going to complain about $650 going in my pocket, but let's kind of use that example here on why I took trades. I remember vividly on Tuesday, and you can see this perfectly. So Tuesday we pushed up, right around here, we started to get back above the 9 and 21, which is something I look at a lot for intraday trading. And you could see we obviously had premium selling here. I got into a put spread probably right around here, if I remember. It was right at that 10:30 mark. And
so you're already thinking like, oh, I'm bullish. I think we're buying this dip up, right? And so which ones did you sell there? We're at 618.80 roughly. What were you selling there? I imagine like 614, 613? I forget. I know I sold similar ones that same day with you.
So that is 1223. Let me just get to my logs. I'm off the screen for a second, so you won't
You're
see.
good. No worries.
In that case, I sold 614 puts and bought 610 puts for the Q side. So
boom, you got premium on those, right? So it's very unlikely that 0 day we're gonna drop on a Christmas week Tuesday that we're gonna drop below 613. We're at 617.80, right? It's very. I just hope people are making the connection in their mind, like that makes sense, right? You're selling these contracts to these people that are in the market that are not maybe just not as aware of what's going on, right? And they're trying to buy 613 0-day puts and have the market dump when they don't realize, hey man, it's Christmas week. It's unlikely for that to happen, and unfortunately, I'm selling those contracts to you, right? And boom, that's how you're making your money, right? So, yeah, it's just, again, you're already bullish. You're already thinking that way. It's just instead of taking all the risk with buying a directional position, you're saying, hey, I'm going to sell these contracts to these bozos that don't know better, right? Yeah. Essentially.
So I sold my put spreads once we started to get the bounce right in between these two candles right here. So at that point, it was already 618.80. I sold 614 puts and bought 610 puts. My premiums obviously went higher because we just had a down move, and yes, we had a little bounce. But that kind of, for me, we reclaimed the 9 to 21. I was thinking we were going to be more bullish. We didn't get below pre-market low. So in this case, I was thinking, okay, I'm going to go put spread. I'm buying over $4 out on a pretty low volatile week usually, and also a bullish week. So using multiple things to my, advantage, or at least historically advantage, I sold a spread that was 90% chance of probability, and it worked out perfectly. I mean, this is one that you could hold to 0. It just went straight up after that the whole rest of the day. Same thing when we go into Wednesday. I did the same thing. So Wednesday was the day that we kind of just ripped right after the morning dip. This is where SPY actually got the new all-time highs as well. We're looking at Qs here, but on this day, I actually sold puts even earlier. So I actually kind of negated one of the rules that I talk about, just because I just was not expecting anything to be bearish here, especially with us so close to highs. I sold put spreads right on this candle right here. It was at 954, so it was actually the next candle. Once we had that little morning dip, we started to get right back above the 9 and 21. And I sold 619 puts and bought 614 puts. Our low of the day was 621.73. And we never saw anything under 622 after that, after my entry. So another pretty clean trade. Again, when the volatility is so low, obviously you need to play a little bit closer to the money to get some premiums. But again, I'm just looking for those mean reversion trades. As simple as that sounds, it's a big part of my strategy. And then it's just more so choosing the strikes and truly waiting for the right timing. Now, on a week like this, I wish we had better examples, and we could obviously do another session, later on. And again, I talk about spreads every single day in Wolf Trading, so join us live and you can see that. But overall, I was wondering what that was. That was coming through the mic.
I got you.
Oh, was that you?
It's the music in the background. It cut out.
Okay. Yeah, overall, I don't even know what I was going to say now. Shit.
My bad.
No, you're good. You're good. Yeah, I have no clue. I have no clue.
You're good. You're good. Just a thought from Black Mamba in the chat. He said, "I'm closing at 50 to 75%. The rest isn't worth the risk to reward."
Yeah.
And I would say, like, you can absolutely do that, right? You're going to pay a little fees, but, like, yeah, you can absolutely do that. There's nothing wrong with it. If you want to take that cheese and walk away, you can. I will say, though, there's, like, plenty of times in the market, like, for instance, just on this day right here, you know, if you were selling – like, you know, 614s where at the 622, 615s in that area. And then we rip to a new high a day, and now we're trading like over that 623. You can of course take your profits, but like to me, it's so clear to see that premium decay that I would be so confident that this is gonna expire worthless, and I would just let it go. And I think there's certain opportunities that you can kind of gauge and say, oh my gosh, like the premium is so drained here. I'm just going to let this go. But again, there's nothing wrong with taking your profits and letting that happen. You're just, of course, going to pay some fees and whatnot, but it doesn't matter, right? That's totally fine. You can be doing that, no problem. I think that's a great idea.
And another question that I just thought of, because I get this one a lot. So when you're opening a spread, okay, in this case, let's just go back to this, okay? Let's say we sell 619 and buy a 617. Okay. So again, $200 collateral. Let's say you buy 10 contracts. Okay. You need $2,000 to do that. And you would only be making 200. People look at that. And again, some people don't see the risk to reward in a collateral of 2,000 and making 200. Again, I would never, ever risk.
Because you're risking 400, right?
Yeah. Oh, sorry.
No, you're risking 600 because you're risking 200%. Or would it be
400. You're correct.
Okay.
Yeah.
Gotcha.
You're correct on the 400. But yes, exactly. I would never risk the collateral. I've traded through COVID, which obviously everyone knows how crazy volatile that was. I've traded through 2022. I've traded through choppy markets. I've traded through bullish markets. We've traded through, obviously, you know, some bearish ones that we just talked about. And I have never, ever remotely been close to losing even a third of my capital, my collateral. So that's a question I get a lot. Like, they just don't see the risk to the reward in that. Well, you know, I could say the same thing why are you opening a trade where you're buying, let's just use this as an example, I guess, but it's usually used on other things, but you're buying a 630 call for 20 cents where you would need a very big move for that to make you money. Why are you risking this? You know, why are you risking money on that? In my case, you buy because you see it's a low premium. You could buy 100 contracts. You're like, okay, I'll do $2,000 worth here. And you're hoping to make a lot of money. What's the risk and reward to that? I mean, you're going so far out, you really need a big move. If you get one dip, you're already down 25, 30% really quick. That's already 500 to 600 bucks. You know, same thing could be said right back to that question. So when people ask about the collateral, again, that's where the risk management comes into place. 200% stop loss, cut it right then and there. There's always going to be another trade, always going to be another day. But if you don't do that, there won't be another trade. There won't be another day because you just lost your capital. You need to be consistent with your risk management. You need to be smart. You need to be patient. It is okay to lose. Do not fight that mental battle in your head that saying, okay, this is going to come back. Because I've had trades, honestly.
Never going to win.
Honestly, you look at this. I swear to God, if I held trades here, my win rate would probably be 92%. But if I did that, I wouldn't even be able to get to that 92% because I would have lost all my capital.
Exactly. Yeah, all your capital's gone before that happens, right?
Yes.
It's just not worth it.
Yeah, 94,000. So it's just about, again, being smart, taking that loss, moving on, going on to the next trade. Oh, my dog's
And to me, for I think a lot of people, it's easier to take a loss with spreads, because your win rate is so unbelievably high. Like the confidence you have of the next trade working out is so high that like, okay, yeah, I'll take that loss. And I just know for most traders that are directionally trading out there trying to day trade with us on the show every day, that's just not the case. Like I know for a fact that a lot of you do not have that actual confidence in what you're trading, and that's okay, right? It's hard to have that confidence. You got to back test a strategy for, potentially like over a year, right? And like actually really be forward testing it in the market and see success with it, right? But with this, you find that consistency so fast, and I just want that for everybody. And I know spreads can do that for you as long as you got to be a little smart with your stop loss still. You can't just show up and not manage things. You have to still manage things, but again, it's so much easier to take that loss when it comes, when hey, I'm showing up and winning almost every freaking day, right? So yeah, just some pieces I wanted to add there. It's really been helping me too on my journey. So
yeah, and again, every single thing I track on here is literally to the T, to my entry, to my exit. I do it for myself, but I also do it because I really want people to get into spreads trading. Because again, it's changed my life, it's changed others' lives. You can see, I had one losing month in March, and again, that may not happen, going forward, but I'm just saying, my results for the last year have been exceptional. I made 2,000, lost 700, and then that was it. Everything else from there, you can see just gained. Now, again, I sized up. You can see, obviously, I started to do that. But this is how consistent and how compounding the strategy could be. Now, this is where another thing that we didn't kind of talk about is when people are getting into spreads, they ask me what they should risk.
And this is just the past year, Gnotz, right? You've been doing this for 6 years. I just wanted to clarify for
I wish I documented the whole thing. I did not, but I'm 100% documenting every single day going forward. Did my camera just go off?
No, you're good. You're
okay. So with that said, I wanted to get to where I was just going there. So here's what I tell people, because they ask me what they should risk. That is all up to you. I have no clue your financial situation. I have no clue what you were looking for. I don't know what you can risk. I don't know what you want to profit. Here's the best thing I say. Okay. If you, again, don't know your financial situation, but if you feel comfortable and you can emotionally support, let's just say, losing 500 a day, your profit that you want to look for again is around that 200 to 250 range then. Okay? Because you can consistently compound that up. Yes, you lose a 500 day and then just consistently compound that up. If you could lose 1,000 a day, then your profit goal is 500 a day. Like, you need to figure out that for yourself, because I do not know your situation. I don't, really want to know your situation. I'm always here to help you in any way possible, but that's just something I personally cannot help anyone with.
That's where I say, find an amount of money that you're just willing to risk, and it's always a 200% stop loss on it, right? A 1 to 2 risk to reward ratio against you, essentially. But that's okay when your win rate's freaking almost 90%, right? It doesn't matter. I'll take that all day, and I don't know a single person that wouldn't. If you were to hand somebody Gnotz's yearly P&L right now and say, yeah, but you're going to have to trade a negative risk to reward ratio, but you're going to win basically 90% of the time, everybody would take that, no problem. You would sign up for that any day. So that I would say, just don't let it scare you too much. It definitely kind of threw me off at first because we're so conditioned to having a positive risk to reward ratio, right? Like, there's not a trade I take in the day that isn't a positive risk to reward ratio. But with spreads, you gotta change it a little bit, right? Things are a little bit different with this type of trading. So just change that in your mindset a little bit, and it starts to make sense.
Yeah, honestly, I think that might be like a good place to kind of end it. Other than, basically going into Q&A right now. And again, if you guys can't think of anything right now, of something that isn't asked, you can always contact me, whether on Discord, whether on X. I answer everything. For anyone in here that's contacted me, I do. So don't be afraid. Don't be scared. Don't think I'm not going to answer you, because I'm going to answer every single thing you send. So please do, if you don't see your question answered here, or
I'll go through some questions right now, and we can answer some stuff. And feel free, guys, drop your questions. We'll do a little Q&A right now. I know Mamba was wondering, do you guys only do QQQ and NDX? I'm personally right now, like, I've been newer to spreads. Gnotz has been helping me out for the past month now. I've just been doing QQQ personally, but obviously you can do this on SPY, right? You can do this on traditional stock, like individual stocks as well, selling covered calls and stuff if you're having a long-term position or whatever. But we were just mainly focusing on the kind of intraday selling of spreads on QQQ and SPY. But yeah, you're doing NDX a lot, aren't you? When you want to take a little bit more risk.
Yes, I'm doing NDX. I'm doing Qs, but mostly NDX. Yes.
Okay, gotcha. Hey, shout out ProFast with the membership gifted.
Yes.
Let's go, baby. Can Vanquish prop from eval fees be written off on taxes?
I'm actually not sure. That may be a good.
Eval fees can potentially be written off. I would talk to a professional. We're not tax professionals, but it's something I do every year. So yeah, you can definitely look to do that. I would just talk to somebody that actually knows what they're talking about. I just trade. So I don't really know what I'm talking about there. Do you use Delta to go in or out? We talked about using Delta for picking your specific contracts and having that over 88%, right, of probability. So that was a little earlier in the stream. If you missed that part, you can definitely go back and watch that. And again, guys, this will be posted as a video. Obviously, it's going to stay up as a live stream as well, but I'm going to edit it down and post this as an educational video for you guys to come back and watch as well.
Why don't you do SPX? That's a question I get a lot as well. So, they talk about the tax bracket thing or the taxes things for trading SPX. It's the same thing for NDX. That's actually why I trade NDX a lot, because you still get that, 60-40 long-term to short-term trading. So yeah, I know Qs, I know NDX a lot better. I know NQ a lot better. I focus on them 24/7. So I just stick to trading NDX and, sometimes Qs. With that said, I see another question here. Wait, where did it just go? Public doesn't have spreads. Yes, public brokerage doesn't have spreads. The only ones I know that have, sorry. Let me take that back. I said that wrong.
Stop losses on spreads, you mean? Yeah.
Correct. Public brokerage doesn't have stop losses on spreads. The only brokerages I know that do is Schwab, I believe E-Trade, and Interactive Brokers. I may be missing one or two, but Robinhood doesn't have it. Webull doesn't have it. Public doesn't have it. A couple others don't have it. But I know Schwab, E-Trade.
That's where you just manually have to manage things a little bit better. Which I've been doing personally. I've just for anybody wondering, I'm not putting, I know with futures and everything, like I won't enter a position without having a set stop, but with spreads, I'm manually stopping out, right? I'm sitting there, and if I'm hitting 200% stop loss, I'm exiting manually. So you might have to do that with some of your brokerages, but it's not too bad. And it's not something, again, you have to like really manage throughout the day. You could hit 50, 75%, sell it and walk away. Or you could, get to a point where you're really confident that it's going to expire and just literally go on about your day. I do it all the time. So
yeah.
Can you talk about early assignment, how that applies to spread trades and how you mitigate that risk? Yeah. Do you have any thoughts on that, Gnotz? Because I don't know anything about early assignment.
Yeah. Again, I've never been assigned personally, so I truly don't know. And again, I usually do NDX, so it's cash settled as well. Right at 4 p.m. It's just dead and done.
But with the way you're doing things, there's no real risk of you getting.
Again, I don't even get close to that 200. That assignment either. I'm usually way out before then. So yes, we talked about this in the beginning. You do need level 3 options and a margin account for any brokerage. You cannot use a cash account to trade spreads.
Yeah, we did mention that in the beginning, but good.
And another thing to kind of consider there is that's for iron condors and spreads. Just spreads in general. Yeah. Iron condor is the same thing as a spread.
I think you can only do like just naked like directional calls and puts.
Yeah.
Besides that, like on any other, I think it's level 2 you have to have for that. Pretty sure. But any other type of trading with options is going to be level 3.
Yeah.
If you increase the position size as the account grows.
Yes, I do.
Right, you're doing you're always increasing, just keeping it the same percentage.
Mm-hmm. I personally increase it a little bit. I don't do it after every single win. Let's say I do it in like $5,000 intervals. If I make 5,000, I'll increase at a contract. If I make another 5,000, I increase at contract, stuff like that.
What's up, Eva? Shout out. Yeah, you can always keep it simple too. Like me personally, I'll pick a percentage. So like if I'm trading, a $50,000 account, I want to risk 2% of it or whatever. You just do that, and then no matter what, you're just always risking 2%, whatever dollar amount that is. And if that turns into $55,000, then it's just 2% of 55,000, right? Yep. That for me has always kept my risk super just in line and never really had to worry about it too much. So,
yeah. A question here was, what's your favorite stock to do spreads on? Would it be something highly volatile like MicroStrategy? Again, I focus a lot on same-day expiration for Qs and NDX. You could do highly volatile names, like MicroStrategy. You just got to be safer with your strikes in that case.
Yeah. Because I don't see why not, right? It's the same thing. Yeah, exactly. As intraday, it's just on a bigger time frame, similar to how like day trading versus swing trading or long-term investing, right? It's the same thing. It's just going to be a little bit different because obviously that expiry is not coming end of day. You're not going to see those contracts probably decay as fast initially, but I mean, yeah, imagine on MSTR, which I'm not saying this is going to happen, but imagine on MSTR, you were to sell like 145s right now, and then we rip to 200 again. Those will probably pay pretty damn good over the next few months if that were to happen in like 2 months from now, right? So you can definitely do it. It's just a matter of time frame and what contracts you're picking. I'm personally not there yet. I'm just doing intraday. It's so much simpler to me to start out. So I would push people towards that to start.
Going back to that, what was just asked. So C's had a question before where he asked a question. So the most you can lose on a spread is the collateral. Yes, correct. Again, never ever have gotten into that in my 6+ years of trading spreads, almost 7. Never even got remotely close to that. Again, I stand by my 200% stop loss. So yeah. And I see another one here. It was right under it. You're 100% right, Black Mamba. 1 year is nothing on backtesting. Again, I wish I was, logging all this.
I know. I would have loved to see that data over the past 5-6 years. That would have been great.
Yeah, I'm just not going to do 5 years of logging. I'd probably.
That's why we have automated stuff to do it for us now.
Yeah, I would not enjoy doing that. But everything will be 100% logged from here on out, and we have over 14 months of data already. So,
do you how often do you ever do naked spreads? Is that ever a thought process? Do you ever sit back and go damn, I win so much with this?
So you're
just do it naked and not even
something like that?
Yeah, just selling a put, not buying a put as well, because I mean, when you're doing that, you're just essentially hedging yourself on that position. So when things, if it does go bad, and you take that 200% stop loss, you're obviously making a bit on the put that you bought, right? So is there ever a thought of doing it naked? Because I've been thinking about that personally. I'm like, dude, we're winning so much.
Yeah.
Sometimes, even though the loss is usually small when you're taking it on the contract that you bought, it's just sometimes I'm like, I want to remove that altogether,
Yeah, so that's a good one.
Do you think it's worth it, I guess?
I do sell regular puts. I only do that when sorry, my dog just made a funny noise.
You're good.
I only do that when for example, I just sold puts on Zeta. I sold puts on Path names that I want to own for the long term.
Okay.
So basically, in this case, for example, I sold January 16th, 15.5 puts for Path. Now, if Path, I am okay if I either collect the premium or if I get the shares, because I want to actually own that name.
Yeah.
So either
okay, so it's more with the individual stocks, and when you're investing in something, you're willing to take something on the naked side.
That's when I'm selling them naked to actually either own the shares or just try to collect the premium as well.
0 days too volatile. It's not really worth it, huh? It's better to just kind of have yourself covered a bit on that position.
Yeah, I just never done it personally, so yeah. And plus, if you do it, let's say you do something on QQQ, you would need what is it, $60,000 to even open one?
Yeah, that's ridiculous. Yeah, that's too much.
Black Mamba asked me if 2 to 2.5% bi-weekly is the goal. In all honesty, I make more than that. Again, I'm sizing pretty decently. Again, I just know my strategy. I know what I'm willing to risk, and yeah, so I look for more than that. I don't truly have a weekly goal. The goal is just to end green. But I have yearly goals, or I have, like, let's say a goal to my birthday, like something like that personally. But my weekly goal is just to truly end green. I don't have a specific thing. Now, if you're selling, like Jordan just asked, like naked puts, selling just puts, wheel strategy, yes, I'd look for a weekly, just around 2% bi-weekly goal or weekly goal, yes. But for my spreads, no, not really.
Do you have a methodology on watching the price action like candlestick trading? Yeah, that's what we do. So that's what we traditionally do every single day. If you're new to the channel, we're live every single day. Of course, it's the weekend, but every single weekday we're live. We will be back live Monday. And that's traditionally what we do, is normal trading, reading candlestick charts, doing all that. And of course, there's a little bit of, obviously, like candlestick reading when it comes to spreads, but we're more just looking at the areas that we don't want the market to pass. Right, it's not really like we're finding patterns to trade off of. There's definitely times where I'm like looking at the market and I'm like, I think we can drop here, so I'm gonna wait to sell these puts, and try and capture that volatility. And that obviously comes from understanding the candlestick charts. So we are doing that traditionally every day. So come back and watch us throughout the week. We'll be back Monday.
Yeah, 100%. I know you got, again, if you've been watching for a while, Rambler, you've heard us forever talk about specific candles, especially me and Casey talk about specific candles, hanging mans, inverted hammer, stuff like that. So 100% that is a big part in watching price action, looking for reversals, possible continuation stuff. So yes, 100%.
Yeah. Well, crew, do we have any other big questions that we want to get in? Of course, you guys can feel free to talk to Gnotz. Put any I'll be posting this as a video on the channel, and you guys can put any questions in the comment section of that channel, and we'll be answering questions there as well. But I want to make sure we get everything on the stream.
I just posted a Discord link to sign up. You could see.
I pinned your results as well. If anybody wants to see the yearly results, I pinned that in the chat.
And on those results there, it also has the Discord if you're ever interested in trading live with us daily. You can see all the entries and exits. Also on there, we're connected with PeakBot. You could basically literally copy trade my spreads once I enter and exit. Same thing there. We started
That's
that.
Fire. That's a great way to kind of start too. If you have a few extra bucks to do it, I would do that, because then you're kind of understanding. Okay, Gnotz is doing this. Why is he doing that? Well, let me go back to the video and watch. And okay, he explained it like this. That's why he's selling these puts or whatever it is. So
yeah, exactly. And with that, already up $3,200, 65% return, and a 92.3% win rate.
Freaking awesome.
So it's been crazy. Again, I love spread, second income. My goal this year, and I've said this on X and everything else, my goal this year is to truly turn a lot more traders into spread traders.
Because you got me now. I'm there now. So Rambler said, do you ever look at the volume profile on the chart? Yes, but that's more when we're traditionally trading, not selling spreads. We talk about that thoroughly on our stream though, so come back and watch us there. This was more of just talking about credit spreads. How long do you have to trade until your broker allows you to be approved for level 3 trading? I would say no matter what, like say that you have a decent amount of experience when you're signing up for it. I don't think there's a limit on it, but I know some people have like gotten denied if they say they have no experience. Even if you have no experience, just say you have like a couple of years. It's fine. They're not double checking you. I promise. It's fine.
Yeah. Yeah. Rambler, I do use volume profile 100%.
It can be good for spread trading, I guess. You know, if you identify a spot that, you know, it's because volume profile is just extra point of confluence, right? And if it's giving you confluence that you're in an area that is kind of dead, that has low volume imbalances, we're not really seeking out liquidity anywhere. It can be useful, right? So.
Yeah. By the way, Regis or H Regis. To answer that again, there is brokers that actually kind of just could shoot you right to level 3, like Tradier, which is actually the copy brokerage we use. I know Tasty Trade, you could basically almost shoot right to level 3. And lastly, to kind of answer that RAM question, so he asked she asked, spreads are hard to catch exact limits. Is the copy trading market or limit orders? It's all limit orders, and we really have not had any issues with executions of that, because they also have a plan, I guess a stopgap in place where it automatically adjusts within a few cents, entry exit to fill, and then there's also like I can't think of the exact word, but if I exit and it for some reason doesn't exit you, which also hasn't happened yet, but if for some reason it doesn't do it, there's an auto execute. It I can't think of the word they use, but it just auto negates your trade out.
Got it. That's beautiful. Love that.
Yeah, if anyone has any more questions on spreads, feel free to ask on X or DM. Always here to answer anything. We talk about every single day in the Wolf trading rooms.
Mama said, I remember you guys from X. Now I know you. What is Wolf trading? Wolf trading is well, we do the spaces still. It's just we converted it from doing the spaces on my personal account, Ace the Kid, to doing it on Wolf trading now. We started a whole nother account for it. So now we're doing it here, baby. We're back.
There's the Discord link, by the way, right there.
Yeah, I'll pin that in the chat too, just so everybody can have that.
How much is the trading room? It's $79, but you could use code 35P to get 35% off permanently.
Do that. Take advantage of that.
35P.
And remember, guys, if you don't have, I know there's a lot of people out there that might not have their own options accounts or enough money to maybe put in an options account. Remember, you guys can sell these spreads and do the same type of trading on Vanquish, which is that prop firm for options, the only one that we're trading on right now, the only one that we really know of out there. So use Vanquish. We love Vanquish. I still think they're running a killer sale right now too. I'm not 100% sure.
A sale. Yes.
Dude, use code Wolf. Get yourself an account for like over half off right now. And just make sure it's an advanced options account. You have to go with advanced options account if you want to sell spreads or do any other type of options trading besides just directional calls and puts. But yeah, go on Vanquish, use it there. Gnotz posted his room, use that. Use code 35P, right? And save some money there. What else I have to say? Credit spread / debit spread. How much cash do you need in your account and which stock is good for spreads?
So
that's a good question. But you talked about what you need for collateral, but like I guess what's an account size that you would say is like minimum you should have this much?
2,000.
2,000? Okay.
Yeah.
All right. Makes sense.
Which stock? Again, that just truly depends on what you're looking to do it on. Again, I love 0DT, QQQs, and NDX, but you could do any specific stock.
Rambler, as for interface, I would say it's gonna depend on kind of what you like. They're as long as it's an options chain, like they're all good. They're all gonna show you what you need to see as long as you're getting updated data and you're looking at an options chain, they're all basically going to be the same.
Yeah. Trade. TRADIER.
I don't know.
That's the brokerage. That could put you right to level 3.
Gotcha.
And another reason, by the way, so people talk about having under 25,000 for the PDT, the pattern day trading, and only having those 3 day trades.
Yeah,
that's another reason why I'd use the NDX. So, for example, with the copy trading, I trade NDX a lot because if I hold it to that end of the day, it doesn't use a day trade. Obviously, some cases, I sell it, beforehand, and I only
does it use a day trade if you're doing it on QQQ?
Yes.
It does. Okay, interesting. Even if you did, though, that's still 3 days out of the week that you could potentially sell spreads and make extra money.
Yeah, exactly.
But
there should be
no reason. You're limited for sure, but still, that's 3 days that you are.
Yeah.
You have like a 90% profit to make money. Go make it.
There should be no reason why you have trouble not staying under 3 or less day trades.
Yeah. That's good stuff. One last thing. What's got me curious is, do you ever follow open interest versus volume in the options chain? For spreads, no, right? We're not concerned about
spreads,
that.
I personally don't know.
Yeah, we're not concerned about that for spreads. For if you're buying options, that's definitely something that you want to look into a little bit more, depending on what's going on in the market. If there's earnings, if there's there's a number of things that could be happening. High volatility event, but not for spread trading, no. Well, guys, yeah, code 35P on Gnotz's Discord. You guys save some money there. Well, y'all, I think we're going to wrap it up. Gnotz, it was a pleasure, brother. Thanks for hopping on, doing that. I know the audience really appreciates that. I appreciate that. We're going to make this into a video for everybody, so stay tuned. I guess throughout this next week, I'll end up posting that, and we'll get that out for you guys. And again, you guys can ask Gnotz questions in the DMs. You can ask questions on that video when we get it up, and we'll be around to get it all answered. So shout out to everybody in the chat. Make sure you're liking and subscribing. We're going to wrap it up, but everybody enjoy the rest of your Saturday. Enjoy your Sunday. We'll be back Monday bright and early. I think EMP is going to be live trading early morning. I'll be on Spaces until about 1 p.m. Eastern, and then we'll all be on stream. So we'll see everybody there. Gnotz, appreciate you.
Sounds good.
And yeah, we'll see everybody on Monday. Peace out, y'all.